Hi, my name is Perez Goree, CPA and certified tax coach. And today I'd like to share with you several common mistakes we see small business owners make when it comes to their taxes. And we want to share a little bit with you today. Top 10 common mistakes for small business owners. One of the first things we see small business owners making errors in is failing to save for their taxes. Many new business owners, they don't set aside enough taxes to cover their tax liability at the end of the year. And they end up owing monies and taxes that kind of roll into future years. Generally, we see this with a lot of new businesses that we on board, where they made a lot of profits, in their first year of business, but they didn't set aside any money for their taxes, and they end up owing monies. And again, that tends to perpetuate itself into the future. Kind of a good rule of thumb is you want to think about setting aside 25 to 30% of your profits. Kind of set that aside, and it's like a savings account. So when we get to the end of the year, or if you need to file quarterly taxes, you have some money accrued and set to the side to cover those liabilities. One of the second things we see small business owners struggle with is classifying their workers, meaning the people that are working for them, are they independent contractors or are they actually employees? So one of the questions you may want to ask yourself is, do you control what the person does, when they do it, how they do it, and where they do it? If the answer is yes to some of those questions or most of those questions, that person may be trending towards being an employee, but there's also several other considerations to make to determine if the person is an independent contractor or an employee. So you may want to seek some guidance to help clarify that. Another challenge we see in number three is missing quarterly estimated payments. Again, it kind of goes back into number one, failing to save for taxes. And then since they didn't save for taxes, they're not making estimated payments as well. Many business owners think that they don't have to file their taxes or pay their taxes until the end of the year when they file their tax return. However, given the size of their liabilities or what their prior liabilities were from the prior year, may dictate that they need to make quarterly payments in the current year. And what that basically means is you would take your profits from your business and kind of project what your tax liability would be, and you simply would divide that by four, and you make those payments over a quarterly basis. And these are the dates that the payments are due: April 15th, June 15th, September 15th, and January 15th. Uh, another problem we see, which is number four, is mixing personal and business finances, which we call that in the accounting world commingling funds. This makes it a challenge for you as a business owner to easily prepare financial statements. If you wanted to know how profitable were you for the year, well, instead of only having to look into your business checking account, now you need to look at your business and personal checking accounts and bank statements to determine how profitable were you. Particularly on the personal side, you have to look through every transaction to determine, was this a personal transaction or was it a business transaction? And that could take a very long time to do. And it actually ends up causing people to procrastinate doing their books because they know that this may be a daunting task to do. And it kind of leads into the next item, which is not keeping adequate records. Again, this basically goes back to your bookkeeping, where the clients can't tell you how profitable they were or what type of assets they have, how much money is coming in, how much money is going out. They really can't tell you, or they just wait to the end of the year when it's time to file the taxes to find that number out. And it may be too late in the year once you find that number, particularly if you wait to the end of the year to find out that you have a big profit. And again, it goes back to uh, number one, you had a big profit, but you didn't set aside any taxes to pay the liability. So that runs to a lot of problems. So you can use some good software. One good software is like a QuickBooks Online that you could connect to your bank account. And as transactions post to your business account, they're also posting to your books. And you can almost have real-time financial statements. And it helps with tax planning, helps with this financial planning in general, and helps you manage your business. Another problem we see with clients is overlooking deductions. Um, some of the common deductions are home office deductions, mileage, startup cost, and we call a lot of these your baseline tax strategies. These are your low-hanging fruit that a lot of businesses may miss out on. And in a future session, we're going to be speaking more. We're going to have a video presentation on exactly what baseline strategies are. Again, those low-hanging fruit that whether you're making $50,000 a year, $2,000 a year, or $1 million a year, there's certain deductions that everyone gets to take. And following that course, we're going to get into some more advanced tax strategies we'll be talking about as well. And the seventh item we see a lot of businesses make mistakes with is ignoring their state and local taxes. You know, a lot of businesses, they focus on their federal taxes, but they may disregard if there's any state income taxes in the state that they're earning their revenues in, as well as sales taxes, state taxes, and some of the other taxes that could be applicable, maybe franchise taxes. Franchise taxes are basically they're a fee for the privilege of doing business in a city, state, or county, and not understanding what those rules and regulations are could cause you problems, particularly when you're only focused on the federal side. In the area of sales taxes, there's this thing called Nexus that a lot of business owners fail to account for, meaning your business may be located in one state, but you're selling goods, products, or services in multiple states, not just your home state. You may have tax liabilities in those other states as well. So again, if you're just focused at the federal level and you're not focused, at the state level, you may have tax situations in multiple states and not be aware of it. So, you want to make sure that you're accounting for not only your federal, but your county, state, as well as local taxes. Another item we see small businesses making errors in, and that's item number 8, is underreporting their income. With the prevalence of making online payments or making payments through PayPal, Venmo, Cash App, and other things like that, that could lead to underreporting your income. Particularly where if the person who paid you more than $600, they may issue you a 1099 as well as a 1099 to the IRS. And if you fail to report that income was reported to the IRS, and you may be getting a letter from the IRS, several months after tax season, stating that you didn't report all your income, and you may have more tax liabilities than you anticipated. So you want to make sure that all of your income is accounted for. And the ninth item that we see small businesses struggle with is failing to properly structure their businesses. And a lot of times we see this where clients are do-it-yourselfers, where they don't want to seek advice, they don't want to pay an accountant, they don't want to pay an attorney, they don't really want to pay anyone to set up their structure, and they go out and do it themselves, and they may be costing themselves money in terms of paying too much in tax if you have your business entity set up improperly for the type of business that you do. Like for example, if you're running Airbnb, long-term rentals, short-term rentals, fix and flips, depending on what you're doing with those pieces of real estate kind of drives or dictates what entity structure you should be operating under. So again, you want to seek some good advice on that when setting up your business structure to make sure that you're covering yourself from liabilities as well as maximizing your tax position. And one of the last items we see, which is number 10, is procrastinating on preparing your taxes. And that tends to be a function of bad record keeping. Again, it could be you're commingling your funds. You have to go through your business and personal accounts over the past 12 months to flush out all your business activity. And that may become frustrating. So the clients just procrastinate and don't do it, and they wait to the very last minute. And they miss out on some deductions. And You're just not in the most proactive position to file your taxes and to save money in taxes. Particularly when we work with our clients, we make sure that bookkeeping is current and up to date, and we integrate that with our tax software, with our tax planning software. So at any moment in time, we can tell our clients, if you had to file your taxes today, this is what your tax liability is, and this is how much you would owe. And here's several strategies we can use to mitigate those liabilities. So we are in a proactive position, not a reactive or procrastinating position. So you don't want to procrastinate on your taxes. And a bonus tip is a lot of people they skip hiring professional help to help them with their taxes. They try to handle the taxes on their own, and they may not understand all the tax laws, and they may put themselves in the least favorable position with their taxes. So you definitely want to consult with some professionals along the journey as your business begins to grow. And there are several ways to get more tax planning ideas, concepts, strategies, and tips from us. And to do that, you can schedule an appointment for your own customized tax plan, or you can enroll in one of our upcoming tax courses for business owners, or you can acquire one of our ebooks, as well as you can download one of our white papers to get more details on some of the concepts and topics that we talk about. And we look forward to sharing more tax strategies, ideas with you. And we want to thank you for watching and have a great day.